Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 4-hour chart of gold USD in front of us, and you can see that I have many colorful lines on the chart. So let's understand them one by one. First of all, I would like to mention that as expected, market is not showing any crazy moves. More or less, market is sideways, market is choppy, market is waiting. Market is waiting for tomorrow's CPI because tomorrow's CPI will be a big event for Forex traders because market will be going crazy. Okay, and before a big event like CPI, NFP, FOMC, market prefers to stay silent so that it can go crazy after the news. Okay, so we can expect that our reversal trades on today and tomorrow, okay, they will be working nicely because after that, if market goes in a particular direction, then obviously following the trend of the market will be the wiser option. If you look at a chart of dollar index, then as expected, the support level of 104.50, 104.40 did a perfect job here. We can see the previous resistance is working as support here, and the 50 moving average is also doing the job of dynamic support. So we can expect that market will be taking support and market will show some upside here. In case market comes down also, do not consider that a trend reversal has come because before a big event like CPI, a trend reversal is very rare. We can expect that market will be getting next support around 104.00. This is the next support on the chart of DXY. If DXY surprises us with red candles, if market breaks this, why 104? You can see previous support around this area, then we have 100 moving average, then also we have a trend line. If we combine all the factors, 104 seems to be a very strong level before a major event like CPI. Okay, so that's all about DXY, nothing much to talk. Now let's head towards the chart of gold. To understand the levels better, let's move to 1 hour time frame because in this type of market, day traders make a good amount of money, and hopefully you guys made good money yesterday also, because yesterday we saw perfect reversal from our resistance zone twice. Personally, I only got this opportunity, and as I always say, I'm a 40 pips trader next door. Yes, I only got my 40 pips because when market gave this move, okay, my workshop started and I missed it. Okay, so I'm left with 40 pips only. Okay, I was okay. Anyways, right now market is standing at 1922, and we can clearly see that right now market is sideways. Previously, market was in downtrend, there is no doubt about it, but right now we can simply see that market is sideways. Market is reversing from the resistance, market is bouncing from the support, which means the number of buyers and sellers are equal. And in this type of market situation, we can trade both the sides. You can buy at support, you can sell at resistance, but you cannot enter in the middle. You can enter, but if you enter in the middle of the chart, then you will be gambling because we will be going for 50-50 here, so try to avoid. So as market has already tested a resistance level many times, there is a chance that market will be breaking the level, which is 1929 to 1931. So market has already tested, you can see 4 times, so 5 times is very risky, and after 5 times, okay, it is very extremely risky. So today be careful. If you see the market hits 1929 1931 level, simply go to 50 minutes time frame and see how the market is doing. If you see the market is reversing, market is showing good price rejection from above, then only go for the sell. If you are not convinced enough, then you can also avoid it because already market has tested a level many times. Today 1934 to 1935 seems to be a better level, more reliable level to take a sell position. And as you can see, the level has become very common. There is also a chance of stop loss hunting. So 1934-35 seems to be a better level because of FIBO 50% retracement around this area. Previously this was FIBO 38.2, so we have FIBO's 50% retracement around this area, and the previous support will also be working as resistance here, and the next resistance will be around 1939 to 1940. Why 1939 1940? You can see we have FIBO 61.8% retracement level along with that previous support will be working as resistance. So these are the two levels where we can look for sell position today. And today, if the volatility of the market remains like this, if market remains choppy, then obviously these levels should work. When market will be hitting the level, okay, simply go to a lower time frame like 15 minutes and observe the market behavior. If market reverses, you can go for a sell. How much you can expect? Obviously, I am your Mr. 40 pips. So at least you can expect 40 pips. If you see that after 40 pips also the selling pressure is there in the market, then you can continue. But at least we can expect 35 to 40 pips from these levels. So in short, we have three resistance level on the market right now: 1929, 1931. But as market has tested the level too many times, it is risky right now. So we have two more levels on the chart of gold USD, which seems to be more reliable in comparison to 2931, and those are 1934.35 and 1939, 1940. Okay, and what about support then? Because we can see market has formed a red candle. So support is still the same here, 1915, around 1915, 1916, 1917. The market seems to be making a support here. You can also see we also have a minor trend line which is working as dynamic support around this area. So you guys can also draw a trend line like this just to see whether market takes support or not. If it doesn't take support, wait for the market to come down to 1915 to 1917. And in this market situation where we do not have much volatility, much craziness in the market, you can expect 1915, 1916 to work as support. If market takes support and bounces, you can go for a buy position. But in case market breaks 1915 level, do not take a sell position, because this is a sideways market and we don't have much volatility. And in this type of situation, there's a high chance of false breakout. There's a high chance of stop loss hunting. To save yourself, you need to understand the market behavior. You need to understand when to take the sell, when to stay and observe. So if market surprises us with a big red candle, if you see that during the US session market is going down, TXY is very bullish, that's a different chapter. In that case, obviously you can look for a sell below 1915. But volume is important. But if you see that market is going down with small candles, then obviously market doesn't have volume and you should not trust that kind of breakout or breakdowns. If that happens, then your next level of support will be 1910 level. Around 1910, 1911 level we have support because of Fibonacci. I have already shown you many times. I do not want to draw and bore you again. Around 1910 we have this second support. Then we have the next support around 1904 to 1905, okay, because of previous price rejection around the area. So gold is trading in a range right now. The range of gold is 1915 to 1931. This is the range of gold here. So apart from this range, we have two more reliable resistances and two more reliable supports. That's it. And before CPI, high chance that gold will stay inside this range only. So please follow proper risk management also while taking us buy or sell. Anyways, my dear friends, this is my analysis, and please do your own analysis, because if you don't do your own analysis, if you totally become dependent on me, then how will you be an independent trader, isn't it? So do your own analysis and follow proper risk management. Risk management is above all. That's all from my side, my dear friends. Bye bye, take care, see you tomorrow.